Good day, all. Ira Epstein with your financial market wrap-up, and this is for Thursday, and this is the 5th of March, 2020. We're already looking at Friday trade because I'm just about 5:20 p.m. Central Time. I have one word: buckle up, buckaroos. Remember that? I do. And why? You're going into a Friday where we have to deal again with going through a weekend where we hear about this COVID-19, and is it spreading? What's it doing? 400,000 test kits are going to be in doctors' or laboratories' hands this weekend, another million plus next week. With all those test kits, you know they're going to find more cases. Whether that's good, bad, indifferent, I don't know. The death rate hasn't been moving up materially. That's a great thing. Then we have another situation you have to take into account in the energies. OPEC has met. They have not yet heard, to the best of my knowledge, anything from Russia. OPEC wants to cut another 1.5 million barrels. Their dilemma is, as much as they want to cut it, if Russia doesn't join in or says, you know, we don't want to be part of that OPEC plus anymore, does damage to OPEC, but Russia's probably then waiting in the wings to grab market share as OPEC cuts. Will they even make the cut? I think the market is scared and just trying to figure out what to do with that. At the same time, bonds and notes have been crashing in the U.S. You hit a new all-time low in the 10-year note. You got under 0.9. Wow. So you look at it, you see the gold market rallying, silver's trying to hold, copper's fairly stable. The stock market giving a bounce from today's large break, but which way do these markets follow through? When we look at the S&P 500 weekly index, you know that you had a big decline, you've had a bounce, all right? We are up for the week 2.5% on a closing basis. So the market, it doesn't feel like it, but it's made back some of that loss going into Friday for the week. When we take a look at the daily chart, now let me tell you what I've done with this. These are the Fibonacci levels. I've done this for the S&P, the NASDAQ, the Dow, the Russell, and then I did it for the 4 ETFs that follow those markets, the DIA, IWM, QQQ. I did them all, and I put them in a special report, and it'll look like this. I'll come to this at the end of the day, so you can go look. And I did one thing. I made the chart look like this, no other studies, to show the bounce. This is the 50% level. This is about a third of a retracement, 62%, measuring from high to low. And I labeled the numbers and gave you everything in the report as well. Where do we go from here? That's the big question. When I look at the swing line, we are still in bear territory. We have a pattern of lower highs, I've marked off for you, and lower lows. When I widen the chart out a little bit, this is the 200-day moving average of closes in the March S&P 500 index. If this market starts down from here, especially under 2976, then another challenge of that 2850 becomes an important number. Pay attention, it's going to be an important day. A sign that the market thinks it might be getting overdone would be coming back and taking out this high that we made this week so far. That could put you into a challenge of the 100-day and the 18-day average of closes. Where's the bias? Down. What's the trend? Down. Now, Bollinger Bands are not going to be supportive. Normally, you know, you hit a band, you're looking for the bounce. Well, I don't think they're supportive. You're too close to that 2850 level, and if the market gets down there, I question if the algorithms won't just want to push to see what's happening in that market. It depends on the time of day, if it even happens. But the later in the day, the more dangerous it gets. When we come to momentum, you have rallied just enough to no longer be oversold in the market. It's going to be a wild, wild trade session tomorrow. When we come to the NASDAQ, you had your bounce, you got up to about that 50% level. The market is stalled against the 100-day average of closes. At this point, you have lower highs and higher lows. Do you see that? It's pretty evident. If you take out 8508, be careful. You could make a run to the lower Bollinger Band, which is together with the 200-day average. Could be a secondary test of it. In order to knock out the bearish idea, you've got to get through the high you made right here, that high, which is 90.0250. So I'm looking to see what this market wants to do, where it's at. None of these markets, the major indices, as I'm talking to you, are down over 10%. They've rallied back enough to be more, they're down for the year, but they're not in trouble at this point. Under 10% at the end of the week, we'll get people talking about, are you going into that 15% zone? We'll see. In the March Dow, as I said yesterday, you've got one crossover where the 18-day average of close got under the 100, and now I'm looking to see what it does if it can challenge the 200. It won't do it tomorrow, but it could do it next week. At this point, trend down. Lower highs, lower lows. Market staying under the 200-day average of closes, which means it's the lower Bollinger Band, and again, look where it comes in. Right against the lows that you made on that spike bottom. The Russell only got up a third of the way on a correction of the size of the break, so it's still acting terrible. You can see how the 18-day average is rushing towards the 200. The trend down, lower highs, lower lows, and oversold market. We get to the cash VIX. It popped back up today. It's not giving up much of this gain that it's had. The high was 49.46. It fell back under the Bollinger Band, but it's kept the pattern of higher lows, higher highs. I understand it. I understand tomorrow's going to be one of these days that traders look at and they probably get very nervous from it. We then move over to where the bonds are, and as you can see, they just hug that upper Bollinger Band with an embedded reading. Until the red line closes under 80, the market is staying in a bullish mode. And even if it loses it, the question is how much of a correction. I could at any point, if it's lost, make an argument to come back to that 18-day average of closes, but it hasn't been lost yet, nor has it been lost in the 10-year note, which each tick higher over the previous one is a notch lower in the cash markets. You can see you've got the fully embedded reading. This has just been a runaway market to the upside. In the dollar index, the dollar's not faring well in this, as those interest rates get smashed, and as we are in the direct line of fire now of the virus. The question is, Japan's already had it. Korea's had a big case of it. But if they're similar to China, their numbers should start slipping back soon, whereas we're just getting into those numbers. I just can't imagine what happens if we wake up one day and they go that all the schools are closed or something like that in America. What a hit to the economy that would be. And that's happened in Italy. You do know that. They closed the schools and universities across the country, no longer just in the northern part. Families, the hard hit they're going to take. Who's going to take care of the kids? How do you make arrangements for it? You can't put them in a group setting. Very difficult. So the dollar's anticipating the worst as it's slipping down on that. The Eurocurrencies already had the issue, and they're looking at it from the other perspective. Can it stay up against the dollar? Don't know. You're playing a virus. I don't think you're playing economics right now. That's the difference. Same in the yen. These are vertical moves that are fear moves. And if you don't understand that and you're watching the market, why is it going crazy every day, be it in the stocks, the bonds, why is everything going? I'm telling you, it's the hit that the virus does on the economy or the projections of the hit, what it might do. Will reality match that? You don't know. The market's job is to price things in, and that's what's going on. As for Bitcoin, it broke back to the upside. In other words, it has decided to reject this breakout to the downside. It made its run. It's now got higher lows, higher highs. It's lost its embedded reading. Take a look. You were down here, both numbers under 20, didn't make it there. So it had 2 days where it tried to do it. It denied it today. Maybe that's the right word. It never did embed. So the resistance is back at the 18-day average with support at the 100, but while the swing line's up, the bias is down. It too is a mess of a chart. We then get to the energies, and as I said, it's going to be wild. You can see the differential here as no one knows what's going to happen with the energy market at this point in time. Does OPEC go it alone? Does Russia not go with it? Does Russia join in? Which way does the market go tomorrow? I've heard much talk about wild moves tomorrow. Now, as I'm talking to you, this is Thursday's close in Brent. Now, remember, this isn't open yet. It was down another 2% today. But when you come to WTI, you can see you're getting a little bit of stability in the market, although it is in a downtrend. Support back at 43.97. The question for many traders is, will you crack the $40 level? In the gasoline, you've gone back into a downtrend, but with an oversold price level. Does it challenge these lows again? What I'd be looking for is not, if I'm bearish, not to take out today's high, which was an outside day down of 156.27. If that's taken out, to me, it's a flash signal not to be short anymore, because I'd call that a bear trap. And then maybe the projection is back to the 18-day average of closes. Last in the nat gas, the bears keeping control. First challenge of the 18-day average of close, a total failure. Market got up there, couldn't take out a previous high, and now it's trying to follow through tonight, so still very much in the bear camp. Remember, as I said in my report today, what I did in the stock indices, all of the futures and then the matching ETFs for them. One study instead of my normal price counts and the other. I decided not to do that. I think it's such an important zone, this bounce we've had. From here, we're going to be determining what's the big event right in front of us. That's what I think, at least. Could I be wrong? I hope I am. Let's put it that way. But it's always good to have your eyes open. Are we going to go down and challenge those most recent lows? Where did we bounce to? Why did we stop there? I cover it. So go to our website. Under the word research, you'll see special report. Enjoy it. I'm Ira Epstein. And by the way, we did have some earlier problems with the report showing. If you have that problem, write us and let us know. You'll see how to get hold of us on our website. We don't know why that occurred, but the report should be there for you to see. I'm Ira. Have a good day.